Turkey's economy is firing on all cylinders, with GDP numbers coming in better than expected in the first quarter. The economy grew by 7.4% to around $207 billion, according to the Turkish Statistical Institute. Economists had expected growth of 7%. Turkey's current account deficit, however, widened to almost $5.5 billion in April, an increase of $1.7 billion year on year. The country's 12-month rolling deficit reached $57 billion. Last week, Turkey's central bank raised its key interest rate for a second time in a month to 17.75%. It's trying to keep a lid on inflation and give support to the struggling lira. The currency hit a record low against the dollar last month, while inflation soared above 12% in May. Joining me now is Taha Ervas. He's financial columnist at the Daily Sabah newspaper. Taha, great to have you with us, as always. Firstly, let's talk about the GDP numbers. Were they a surprise to you?
A little bit of a surprise. I think after the 7% that we had a couple months ago, 7.4% was not a huge surprise, but it was great that there's an upward trend, so we're happy with that.
Right. The other figure, as we mentioned there, is the current account deficit. It's widened again.
Right.
Is that trend likely to continue?
You know, that depends largely on energy prices. We've seen a little bit of a drop in crude oil. If that keeps going down, then that'll translate into fewer energy prices for producers, and that'll translate into less of a deficit because the imports will be cheaper for Turkey.
Right. There have been two substantial interest rate hikes from the central bank over the last month. Now, there is usually a lag between any monetary policy adjustment and its effect on the real economy. How long do you think it'll take for those interest rate hikes to show up in the inflation numbers?
I think what's interesting is that the two hikes came right after this spike in the currency, depreciation in the currency. So did producers have enough time to reflect those in their prices is the key question, or was the central bank fast enough in quelling those fears? Obviously, time will tell, but I think if we believe that the producers were satisfied with this 500 basis points in increases, then there shouldn't be a problem, and inflation should be held under wraps, kept under wraps.
We've talked about this before on the program, Taha, but why have Turkish producers and exporters not been able to fully take advantage of the drop in the value of the lira over the last year?
These things take time. I mean, if you are producing something in some country and you want to move to producing them in Turkey, for example, that takes time. There's a lag. So the currency would need to be low for a period of time for new exports to begin starting from Turkey. So let's say Turkey produces something that's not much cheaper, but maybe 10% more expensive than some other country. If the currency goes down by 10%, then it's able to produce that cheaper, then it'll get those exports. But that takes time, so it's not going to be an immediate effect. And who knows if we're even going to stay at this level. If the dollar goes down against the Turkish lira and the Turkish lira appreciates, then perhaps we'll go back to how things were. But if not, then new exports will come to Turkey.
Yeah. Look, elections are just around the corner, June the 24th, as we know. Assuming the government wins, where do you see economic policy going? Do you think it's going to be steady as she goes, staying on the current track, or do you see any shifts in policy after the election?
I think there needs to be a shift in there. I think there will be, only because there were a few major changes right before the elections were announced. The Fed saying they're no longer data dependent on raising interest rates, this spike in oil prices, the Iran nuclear deal being kind of blown off by the United States. These will most likely result in higher energy prices. So unless there's some magic happens and the Europeans completely say, no, we're going to keep going with this, or the Fed abandons this 3% rate that they're going for and they say we're no longer doing that, or the ECB did something interesting, then Turkey will have to change course. It would have had to change course regardless if there's elections or not, but it's going to have to now as soon as possible. So I think that will happen pretty soon. They're probably working on it now before the election, but if not, even if the government wins, then so whoever is in power after the elections will have to deal with this.
Very quickly, Taha, do you think that I mean, we've been talking about what's been happening at the G7. We're talking about a potential dissolution of the global, system, trading system.
Right.
How is that going to affect Turkey?
I think it's going to be good for Turkey. And the reason is because the Europeans are Turkey's largest trading partner. And so if Turkey can kind of, snuggle up to Europe, as it were, then it might be in Turkey's best interest. So we'll see what happens, I guess.
Financial columnist Taha Ervas, thank you very much indeed.
Thank you.
Thank you.